The forex market never sleeps, and neither do I. So let's see what today's charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top podder on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel, and I will see you on the charts. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment we do have quite interesting price action and structure. So first, I will be covering the technical aspect of it from a multi-time frame standpoint. We will then go and see what we have from a commitment of traders perspective, so COT data, which is what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this complex correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market has been testing and rejecting twice the 0.618 golden ratio of the Fibonacci taken on the monthly impulse. We can see how precisely the market respected this level twice, and at the moment we are testing the 50%, so basically moving step by step, first at 0.618, now the 50%, and from here we can expect the market to provide a rejection to the upside, considering that also from a fundamental perspective we are in a high inflation situation. Interest rates just remain the same, so we can expect assets like gold, which are obviously stores of value, to actually appreciate in situations like this. So everything here indicates for a potential rejection to the upside if we look at the bigger picture. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see that in all this impulse to the upside, there is one candle not related to the move, which is actually this red candle here, meaning that this is a quite strong support and demand area, which in fact we are currently testing and already started to reject to the upside. And from here, as we have already identified on the monthly, we can expect the market to provide a potential rejection higher. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down on the daily, what do we see? Now here on the daily, we can see that first of all, in creating this move to the downside, the market has printed this massive M pattern. And in general, after the creation of an M pattern, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support, turn resistance. So here on the daily, we do expect the market to provide a rejection higher to go and complete this pattern at the previous support, turn resistance. What we can also notice is that we have just entered inside of this horizontal accumulation phase. The market has been moving sideways, and clearly there has been some accumulation here, and we do expect a rejection higher. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds, so the non-commercials and the biggest players in the market are doing, we can see how lately net positions have been increased. We went from having 168k net positions up to having 217k net positions, with currently 300k longs and only 83k shorts. So clearly we have a massive amount of longs compared to shorts on gold from an institutional perspective, indicating that a potential rejection to the upside seems quite likely. So how we will be approaching this potential longing opportunity with students. Now, one important thing to consider here on the daily is that we are still below resistance. In fact, this area was previous support here that the market broke to the downside. At that point, previous support was turned resistance here, again here, again here, again here. And at the moment, since we are still below the area from a daily closing perspective, we still have daily bearish structure. However, if the market will manage to successfully break and close above this resistance, after a break on the retest of this previous resistance turn support, this is where we have quite good probabilities to see a rejection higher. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will successfully break above this resistance after a break on the retest of this previous resistance turn support, we will be monitoring price action with students from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market, at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we could be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to potentially reach at least this previous support turned resistance from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.